Price moves up, but it cannot stay. The session forms at the boundary of previous memory. April 23rd Asia session forms near the lower boundary of April 22nd U.S. session box. Price pushes up. It reaches April 22nd U.S. session midpoint. It pauses. It should continue, but it does not. Buying stops early. Distance is short. Reactions come faster. This is the first signal. If price is strong, it leaves midpoint immediately. Here, it cannot. Then it drops. It breaks below April 23rd U.S. session upper boundary. No hesitation. No return. That matters. Because when price leaves a level cleanly, it shows acceptance below. Price continues down. Reaches April 23rd U.S. session lower boundary. Now it pauses. Downside slows. Distance shrinks. Pullbacks deepen. This is the second signal. Continuation is weakening, but not reversing, just losing speed. Then price moves back up. Returns inside April 23rd Asia session box. You feel it now. Nothing holds. Up failed earlier. Down now slows. This is rotation. This is where execution forms. First setup. Price returns to April 23rd Asia session upper boundary. It touches. It tries to move above, but cannot stay. Distance is short. Reaction is fast. This is not breakout. This is failure to hold. Short at April 23rd Asia session upper boundary, because price reached the level and failed to stay above. Stop sits at April 22nd U.S. session upper boundary, because if price reaches there, this failure becomes expansion, not noise, not hesitation, actual structure break. Target sits at April 23rd U.S. session lower boundary, because that is where price already showed slowdown and hesitation. That is where rotation completes. Risk-reward ratio 1.88. Price drops. At first, clean, then slower, then stalls. Distance reduces. Reactions increase. You are in profit, but nothing extends. This is the pressure. You expect continuation, but the chart refuses. This is where most hold too long, because direction looks right, but behavior is wrong. Second setup. Price reaches April 23rd U.S. session lower boundary. It touches. It holds. This is different. Before, levels failed quickly. Now, price stays. It does not get pushed out. This is the signal. Long at April 23rd U.S. session lower boundary, because price reached and was not rejected. Stop sits at February 4th U.S. session lower boundary, because if price reaches there, this holding attempt is gone. No holding. No structure. No trade. Target sits at April 23rd Asia session lower boundary, because that is where price previously returned inside. Risk-reward ratio 2.32. Now the key decision. Stop placement. Some place stop closer. At April 23rd U.S. session box lower extension, or midpoint. That improves reward. But look at the candle. April 23rd U.S. session, 1300 candle. The wick is long. That means price can move aggressively without breaking structure. If your stop sits too close, you are not protecting structure. You are protecting comfort. So you move stop deeper to February 4th U.S. session lower boundary, because only there Does structure actually fail? Price moves up, slowly, with hesitation, but it holds. That is enough. Not strong, but stable. That is all you need. Price moves again, but cannot escape. The session forms inside previous structure. April 24th U.S. session forms completely inside April 23rd Asia session box. Full overlap. No expansion. No separation. Everything stays inside. This is not trend. This is compression. Price moves down. Reaches April 23rd U.S. session lower boundary. It pauses. It should break, but it does not. Distance is short. Reaction comes faster. It returns slightly. You see it clearly. Downside is not clean. Upside is not strong. Both sides hesitate. This is containment. Now price moves up again. It reaches April 23rd Asia session upper boundary. Same level as before. It touches. It tries to move above, but cannot stay. Distance is short. Reaction is fast. This is the same behavior, same failure. So the setup appears again. Short at April 23rd Asia session upper boundary. Stop at April 22nd U.S. session upper boundary. Target at April 23rd U.S. session lower boundary. Risk-reward ratio 1.88. Everything looks identical. Same level, same reaction, same structure. So most traders take it. But this is where the mistake happens. This time is different, because this is not just interaction. This is April 24th U.S. session itself. The session is forming at this level. That changes everything. Before, April 23rd Asia session was reacting to an already defined structure. Now, April 24th U.S. session is defining the structure. That means this is origin, not reaction. If you short here, you are not trading a failure inside structure. You are trading inside formation. That means probability drops, not because level is wrong, but because structure is not finished. Price can move both ways. It can fail, or it can expand. And both are valid. Look at behavior again. Price reaches the level, fails, returns, but does not accelerate. It stalls. It overlaps. That hesitation is not confirmation. That hesitation is uncertainty. If failure was strong, price would drop immediately. But here, it hesitates before moving. That delay matters. This is where you decide. Option 1. You take the trade, but you reduce size because environment is unstable. You are not trading a clean failure. You are trading a forming structure. Option 2. You skip the trade because even though setup looks identical, context is different. This is the key difference between execution and imitation. Same setup does not mean same trade. Now look deeper. Price drops, but not clean. Moves, stops, moves again. Each move shorter, each reaction faster. This is compression. Inside expansion attempt. You feel it. There is no commitment. No direction holds. Everything returns. If you took the short, you feel pressure immediately because it does not move away. It stalls. It gives nothing. This is the signal, not loss. but lack of confirmation. If price cannot move away from entry, it is not strong. This is why this trade is optional. Not because setup is wrong, but because environment is not clean. Now the lesson becomes clear. April 23rd Asia session. Structure defined. Reaction confirmed. Trade valid. April 24th US session. Structure forming. Reaction unclear. Trade optional. This is the difference. You are not trading levels. You are trading when levels matter. Entry is not the edge. Context is. Stop is not protection. It is confirmation of failure. Target is not expectation. It is where structure completes. So before every trade, you ask one question. Is this level being tested or being created? Because if it is being created, you are early, and early means uncertain. And across April 24th US session, price is not reacting. It is still forming.